welcome to the AFC meeting, and we're going to talk about taxes. And we'll talk a little bit about what you need to know to try to minimize your taxes. The IRS code says that it's the responsibility of the taxpayer, all right, to find every legal deduction to minimize their taxes. And that is in the code. It's very interesting because it's in code. They say it's our responsibility. So we as taxpayers need to know, because you go and get your tax return done, and you don't know half of the things that you can deduct, half of the things that you can put on your return that'll help you minimize your taxes. And these are issues that things that you don't even think about. We do it all the time. We do it as individuals and teachers or employees, and they all add up to numbers that can become significant on a tax return. $3,900 up from $3,100 last year, which is not bad. The IRA deduction and the phase outs have increased, which means you can deduct more if you have an IRA. Now, for us at the college, an IRA doesn't work because we have the 403B and we have the FRS. But if your spouse works somewhere where they don't have a pension and they have an IRA, they can put more money into the IRA and take a larger deduction. And that's important because when you get to levels of income where putting in some money into an IRA can drop you 2-3 percentage points in your taxes, it's worthwhile because you're moving money for the future when you need it. If you have that money available, it's not a bad idea to do it. The other thing is your IRA deduction. You have until April 15th to put that money in the bank.
So we can do both, right?
You can't do both because you have 403 and you have FRS. If you do an IRA, you can't take the deduction. You can create an IRA, but you can't get tax benefit from it. Okay? So you have to be careful about it. But if you have a spouse or a partner that can do that, tell them about it. They have till April 15th to deposit the money and still count for last year. The minimum standard deduction for your dependents is about $1,000. And this is for situations where you have married filing separate and other issues. Dependents, be careful with your dependents. There's a lot of people that can be dependent, but you have to be able to prove it. Your children, that's pretty easy when they're small and they're living with you. If you have a spouse that you divorced, make sure that you agree who takes whom. Because if you both report the same child, it'll be a long time before either of you will see any money. The IRS gets very panicky when that happens. When you talk about your parents, the Supreme Court ruled that your parents do not have to live with you to be your dependents. And this was a Supreme Court justice who said, I do not want to be forced to have my in-laws in my house. And I could understand that. So your parents, your husband's parents, they can be your dependents and they don't have to live with you, but you have to prove you provide 50% of their support. Now here's the thing. If all they get is Social Security and Medicare, yes, you can go through it very easy because they don't file a return. But if they have a private pension plan, they're a retired teacher or police officer, or if they have other monies coming in, it's a lot harder. If your parents are on Medicaid, or they get food stamps, or they get rental assistance, do not put them on your tax return because they'll be pulled off of the other stuff. So you have to be a little careful. Nieces and nephews, if they live with you and you support them. I know that. I had 4. Okay? I miss them now. They're not my dependents. Trying to negotiate who am I going to get now. I keep telling them, when you have children, you have to give me one. But, you know, your nieces and nephews, if they live with you. Parents, grandparents, if the grandparents also don't have to live with you. An aunt and an uncle. You know, this is Miami. Extended families. I got an uncle living with me. You know, everybody has gone through my house. And that's a deduction. So make sure that you look at who your dependents are. If you are single and you have somebody that you're taking care of that's your dependent, you're no longer single. You're now a head of a household. That means you pay less taxes. So be careful about that. Because what we're trying to do is minimize your taxes. And sometimes people mark you as single even though you have a dependent. I've seen that. I've seen Liberty Tax Service returns and I've seen H&R Block returns. And they've done that. And I'm going, how could you do this? This is basic tax 101, but they missed that. All right, and they're there. You cannot deduct your dogs. When I was at the IRS, we put somebody in jail for doing that. He was a doctor. He had 5 dogs, and he actually got them Social Security numbers. He bought them on the street. He literally bought them stolen, and we caught him. It was like, you don't even want to know half of the things we saw. The tax rates, the top rate is 39.6%, and to get there, if you're single, you have to make over $250,000, and if you're married, you have to make over $500,000. So you're not really there. And by the way, most of the people in those levels, they have enough deductions to drop themselves back down. Okay? I have clients that make millions of dollars every year and pay not a penny in taxes because they set up their tax planning. We set it up with them so that we work through every single loophole. And they don't pay a penny. If you have no earned income, you pay no capital gains. So if they're going to make a big capital gains this year, they don't work. They don't get a salary from their businesses. We can't do that at Miami-Dade. We're locked by the law, unfortunately. Medical and dental expenses must exceed 10% now instead of 7.5%. Now here's the thing. That money that you have to put in now, that you have to pay on the new health insurance, that is deductible. But it has to be over 10%. Any co-pays, any medicines, transportation to and from the doctor, your mileage to and from the doctor, eyeglasses, contact lenses, saline solution, multivitamins. If your doctor tells you need to take multivitamins, all they have to do is tell you. I tell my doctor whenever he says something like that, put it in writing. He puts it in writing. He takes one of his little pads and puts it in writing and signs it. If you have a child that has to have a special milk, or stuff like that, all that is included. A lot of parents don't know that, and they have a baby and they're giving them that special expensive milk. It is deductible. So anything like that, plastic surgery. I've had many clients lately been doing plastic surgery. I don't know, well, many of my clients are entering their 40s and they're women and they're going into full plastic surgery mode, and which I think is hysterical. So they, all that kind of thing. If your doctor tells you that you need to do physical therapy or some type of thing, if they have some sort of disability and you need water therapy, you can actually build a pool and deduct it. If your doctor tells you you need to do exercise in a pool because of a disability or a problem you have. I have a client who got shot. He was a police officer, got shot. He walks with a very bad lip, and he is required to do water therapy. His doctor wrote it up. The IRS allowed him to deduct it. We went in the first year for an audit. The IRS, the moment he saw the doctor's letter, they backed down because he had a letter from a doctor. Okay? If you're over 65, you don't have to stay into the 10%. They let you stay at the 7.5. Okay, business use of the home. This is one that I tell faculty and I tell some people who are employees that sometimes you do work out of a specific area of your home. All right, you get home and you're still working. All right, Floyd doesn't. He goes home, he forgets about the college. Right?
Yes, I do.
Yes, he does. Like he's laughing like, yeah, right. Like I'm allowed to. I'm physically connected to that phone.
Exactly.
Yes. Well, if you have a room, a specially dedicated room, can't be the guest bedroom.
No.
Can't be a corner of your family room. You have a room that's your office. You can take a deduction for business use of the home. All right? And people tend to have rooms that they do this to if it's a specific room. The maximum is 300 square feet because some people were coming in and saying half of their house is a business use. People try to take an extreme and then they get hit. It's $5 per square foot, but it has to be designated and separated from the rest of the house and not used for anything else. I have an office in the home. It has a private entrance on the side, so my clients come in the side, they go out the side. I have to literally go through my utility room and my garage to get to my house. So it's a separate unit. I deduct that as business use of the home on my Schedule C for my business. But I do grading there for Miami-Dade. I do grading, I do my virtual college, I'm online, I'm answering emails, but I use it for the business. But if I didn't have my business, I could deduct it because it's a separate room with my computer and all my junk in there. And, nobody's allowed in there. That doesn't mean they don't, but it does. Educator deduction. Anybody who teaches, whether K through 12 or whatever, you get an automatic $250 if you remember to put this in for the junk you buy to bring to work. All right? I bring food to my office. I have a stash of chips and brownies and muffins, yes.
I thought that was just for K through 12.
They let the college people, because we're K through 14 in Florida, so we get away with it.
Okay, because I've often read it and say, do I not?
Yeah, no, it's because they restructured us as K through 14.
Okay.
We got looked in. No, I literally asked an IRS agent, not an IRS agent, but the head of the audit division about 2 years ago on that. And he said, well, Florida is K through what? I said, it's K through 14. And it's how we call it. Community colleges are called that way now, so. But anyway, things like that, like food, supplies. But if you have a spouse who was involved in teaching, those teachers spend a lot of money on their classroom decorations. It's more than $250. All right, anything over $250, you can run it through your itemized deduction. But it has to be purchased for use in your job as a teacher. And what I usually tell people to put in there is stuff that directly benefits students. You buy them candy, you buy this, you buy that. And that kind of stuff. I do the food that is in my office, even though my food is not only eaten by my students, but faculty in the department come around, and athletic directors come around and they grab food and they eat it. And athletic directors get very upset when the bin is a little low. I actually get little notes on my bin. Other deductions allowed on Schedule A. Professional and union dues. Professional dues, if you join any organization because your job at Miami-Dade, the dues here that you pay to be a member of AFC is deductible. The dues for accounting association, an IT association, even if it's a networking association. All right, like I'm a member of the National Hispanic Leadership Institute. It's really a networking organization. But through that, I get scholarship opportunities for my students, intern opportunities, stuff like that. I'm part of it, but that's deductible. And let me tell you, we join a lot of groups. And we have, and those come high. That also means if you go to their national conferences and you're not paid by the college, that's deductible. Work-related travel is deductible if not covered by your employer. And unfortunately, Miami-Dade today doesn't have money to send us to a lot of places. So I go to my professional conferences out of my pocket. I pay for FAAE, I pay for the American Accounting Association, for the FICPA conference, all that I pay out of my pocket because I want to keep current in my profession, to keep current in my classroom, and to make connections for my students. So any travels to those type of conferences are deductible. Even if the travel is mileage to get to downtown or mileage to get to Broward. All right, keep track of that, because let me tell you something. If you start jotting this information down, start keeping a log or an Excel spreadsheet, the numbers at the end of the year, they really add up.
Does it include hotel? Or?
Yeah, hotel and your meals while you're away. Hotel, meals, registration, and travel. Okay? And so that includes any CPE courses, any type of courses that you take to maintain in your field. Okay? Maintenance of income. It's called maintenance of income. Anything that you use, any courses, CPE courses that you take, the textbooks for the CPE courses or the materials. And by the way, once you have a degree that gets you into the door to your job, any additional degree is deductible. So if your job really only requires a bachelor's, you come into Miami-Dade at a job that's a bachelor's, you go out and you get your master's. That's an additional degree. That one is deductible. The bachelor's is not, that one is. Because that one is going to allow you to have a promotion, maintenance and protection of income, and includes courses taken to achieve promotions in your job. Well, if you get a higher degree at Miami-Dade, you can fill in more, apply for more higher positions that pay more. Does that make sense? Same thing with a doctorate. It goes into this game. Right, and I tell that to faculty all the time. The only ones that don't understand is the math faculty. When it comes to numbers, I have a problem explaining things to them. But I explain this to faculty all the time. Getting your PhD is deductible. Plus, you're getting a promotion at the college. Plus, the college is going to pay you $2,000 more for the doctorate. Yes, it's going to cost you money, but when you take the net effect of it, it's a lot less than what the doctorate costs. And I've actually mathematically computed this for new faculty, and they kind of look at me like, oh. And So this is important. If you decide to get a doctorate in another field, what the hell not? I have like 3 licenses. Every time I go out to get a new license and I start taking courses, it's all deductible because I have different accounting licenses. Reference books. If you use reference books for work, and even if it's an e-book, I know when you think of books, you think about book, but I do a lot of e-books now, and like the Internal Revenue Code and the Red Procs and the policies and everything, I have it downloaded. I go up to the web and get it. I buy access to it on the web because I'm not going to have 65,000 pages on my desk. Plus, on the web, I can sort and I can do find. So I open up the thing and I go, find this, and they go looking for it. And so all that is deductible. Your telephone, if your work requires you to be accessible by cell phone, and your job does not pay for the cell phone is deductible. Okay? My students call my cell phone constantly.
But you're not required.
I'm not required to have it, but my students call it constantly. That doesn't stop that if you don't have your cell phone with you because you left it in the kitchen and you went down outside to do something, you don't get yelled at for not answering the phone. Yes, you are required because if there's an emergency at the college, you have to get here in 10 seconds or less. Okay? Am I right? At your level of a position, that cell phone is invaluable. Okay? And so you can deduct the cell phone if it's required as part of your job. And there's many people here at Miami-Dade that are in positions that you live off that cell phone because of the way your position is handled. Yeah.
Are you deducting a proportion? Like I use 40% for work, or you can just...
I tell people not to do 100%. And it really depends on how much the work is. But if you run something about 40-45%, the IRS never looks at it. Over 50, the IRS, if they come in for an audit, they want justification. So I tell people use about 40-45%, the IRS will walk away and not even pick it up for an audit. Because they have something called diff scores on every line, and they have averages of what they think it should be. All right, based on your occupation. Now, that's why all my clients are employees, because since they're unclassified as an occupation, the diff scores can't work and the returns can't be reviewed by diff score and sent to audit. I just screw up their statistics. Work for the enemy so you may defeat him. And I learned a lot working for the IRS. I took every training available. I went and did time in every division possible. I even worked at a service center. I wanted to know how they operate and how they think. And every year I drive to Orlando and I go to the IRS tax forum, and every night I take to dinner people who are IRS high-level employees, and I invite them to dinner, people who I've known for years, because they tell me things. Auto between campuses if not reimbursed. How many times you drive between campuses and forget to fill out the reimbursement forms? Yeah, then you put it on your tax return. All right, it happens to me.
That's if you remove with the log, the miles.
Right, but do you know what? The IRS says Mapquest it. So you take your calendar and you go through your calendar and you check all the dates, all the places. That's what I do at the end of the year. And then you just Mapquest the miles and you got it. Mapquest them and put them on somewhere and write them down, calculate it. It's 56.5 cents per mile. And believe it or not, it adds up. It adds up for us. Job supplies, anything you buy for work. All right? Anything you buy specifically because you're going to use at work. And this happens a lot here at Miami-Dade because we have tight budgets. So you may go out and buy a tablet because you need it and you're using it here at the college because the college is not going to provide you with a tablet because we have budget cuts. All right? And so this is why you do things like this. If you don't have if you need a computer at home because you're teaching virtual and you need access to the internet and the computer at home, that makes sense. There are things that you buy, okay? And if you start looking at it, it's incredible. If you look at this list that I sent around, those are for educators, but that'll work for a lot of people in different jobs in Miami-Dade, that list of educators, and there's a bunch of those there. If you start looking at some of the stuff that you can deduct, you're going to go, oh shit, why did I didn't do that? Look at him going like this.
Pay for that outright.
Outright, yeah.
Pay for that outright, so that's $600.
Yes. All right, there's a lot of stuff we forget. Even a briefcase can be deductible if you use for work. I mean, it's incredible how many things we forget or we don't look at because we don't know what we can deduct. This is going on Schedule A. This is a lot more than the $250 because you buy stuff for the office. You buy breakfast for your employees, put it on the $250. Okay? That's another thing. If you buy breakfast for your employees, if you take them to lunch at Christmas, all right.
Birthday on tomorrow.
Secretary's Day, right? Those are deductible meals. If you take somebody out to lunch that's related to the college, that you're trying to get them to contribute money to the college or to provide technology at a lower cost or something like that, and you pay it out of your pocket and you don't get reimbursed from the college, that's a deduction. It's work related. Now, Manny, if you take somebody out on a date, that is not a work related meal.
Oh, I only take employees.
Okay, yes.
Is this only if you're itemizing, or you can take the standard deduction and do all this?
No, this is only if you're itemizing. Yeah. And then I'm going to get to a little trick in a minute. Travel to conferences, classroom supplies. Sometimes I've actually had to buy dry erase pens because we don't have any in the department, and they say they're not getting it for a couple of months. The new faculty in my department went to Office Depot and bought a stapler, a hole puncher, a tray, an inbox tray, paper, folders, because we didn't have them in supply. So that's deductible because she brought it here and put it in her office. Again, a laptop or tablet if you're going to use it at work. Okay?
Question, going back to travel. My aunt travels extensively.
Yes.
And she always writes it off and always encouraged me to write it off.
It depends on
but
what she's doing.
She's not traveling. She goes to museums and picks up educational
I'll give you an
materials
example.
and comes back and
Okay,
says,
I'll give you an example. I was in Iceland this weekend to see the Aurora Borealis because it was a long weekend. Friday we arrived at 6 a.m. in Iceland. At 8:30 I was at the Icelandic Business and Science Innovation Center for a tour. I spent 3 hours there talking to people, the entrepreneurs in Iceland about their industry, their economics, everything to do with that. While the two science people that went with me went off to do whatever science people do with the science people. Well, because part of the trip, I used it for business information. Because I met with entrepreneurs, I met with business people. I'm going to deduct 30% of that trip.
and that's what she's doing.
Yes.
And that's what she told me she's doing.
So if you go to London and you know a woman called Colleen Chung, she has a nephew who works at Google campus in London. He gets you into Google, he gives you a tour, you have a link.
30%.
30%. Okay? You're a science professor and you go to Volkswagen to their engineering faculty, factory, or CERN, their Hadron Collider, or Bayer in Germany. We go to the Curie Labs in Paris. Whenever I'm in Paris, we do the Curie Labs. We have gotten great friendship with the people there. And last time we went to their genome labs where they're changing DNA in vitro to stop birth defects and things like this. They're still using animals, but they're working on that. So we got to see all this biological stuff. For me, it was interesting. My second part was I always meet with the head of research, budgeting for research, and we talk about his budgeting. How does he budget research costs? When does he stop budgeting or funding a research project, and so on and so forth, because that interests me because I can use it in my managerial class when we do budgeting. And so he'll give me some numbers, and he'll actually give me some projects. He won't tell me what the project was, but he'll give me the paperwork on that, so my students can look at real budgets that were done for a specific project. So there is thing. I mean, I've walked into ministries of
So
economics.
you have the documentation to prove that?
Yes, because I get the business card of the person and everything, and I get pictures taken with the people.
Write off is 30%?
Yeah.
Okay.
Well, I write up 30% because that way I don't get audited.
Okay.
And so I do that. But we do that. I walked into Ministry of Finance offices in countries and just walked in and said, I'm a professor from Miami-Dade. I'd like some information about the economy of your country. And they walk right in. I mean, it's amazing what people are willing to talk to you about. If you contact corporations and you say, can I come visit your facility? I'm a professor. They open the doors. We have a great time doing stuff like that. And you learn. Okay. Reviewing income. Sometimes you make a little extra money doing things like reviewing textbooks, reviewing software, things like that. Okay? There's money that can be found and those type of things. There's nothing illegal about it. It's just you as a faculty member or a business professional doing this. This is very important that you do have this, because if you have this, everything on this prior screen, you put into a Schedule C and you get a dollar for dollar deduction. Okay? So if Microsoft calls you and says, would you review a new software, or will you look at a new program or a new tablet for us and let us know if it works right, and you say yes, and they send you $100 or $500, they don't send you much. At the end of the year, they're going to send you a 1099. That you put that income on a Schedule C, and then you move everything over there that's related to your job. Now you have a negative Schedule C, which lowers your wages, your income, and you're now at a lower tax base on a dollar for dollar basis. Here's the trick. You have to show a profit 1 out of every 5 years. What's a profit? $1. Because the computer at the IRS is programmed that a profit is a positive number. These idiots that work with computers, a profit is a positive number.
You do as being asked.
Right, and do anybody...
Someone put the limit as $1, and therefore...
No, somebody said a positive number, so we're a positive number.
Other than zero. That's right.
Right.
Positive zero.
Yes.
So if you're reviewing material and somebody pays you $250 to do
Yeah.
something, and you're going to get, at the end of the year, you're going to get whatever they send us.
Right.
So where?
You put this on a form called Schedule C, and then you can deduct everything that we talked about here, plus any postage, printing, any long-distance telephone calls, if you use a phone that charges these days, any travel you did with respect to it, any use of your internet if it was online basis. Now you start deducting part of your internet, and all of a sudden, and then that trip that he's going to do to the wineries of Napa, where I can give you a connection with somebody who owns a winery, and he could show you all the technology they use and programming, Naked Wines will put you together. So he takes, what? Okay. And then he takes 30% off as a business expense. Okay? Because he's learning about the technology that is employed in the business world, so you can come back and talk to the business faculty about what technologies are out there. You like it? Yes.
So when do you show the profit? What's the profit? So if I get
Okay.
250, when will you show? If I
You
don't
have 5 years. So 14, 15, 16, 17, 18. One of these 5 years you have to show a profit.
But what do you mean by show a profit? That's not.
The computer says $1 or greater.
Well, he means what do you mean by profit?
You have to make money. So if you get 250 reviewing, you have to show $249 in expenses only for 1 year.
What
The
if
rest of the years, you can have $2,000, $3,000 in losses.
What if one year you just didn't do a Schedule C? Would that count?
That's fine, but it doesn't count as profit.
Okay.
It just breaks the cycle, and the computer gets a little wacko and starts giving you another 4 years. I know, because it's happened, and I'm like, can't do this. You shouldn't do this.
Wait, so exactly.
Okay. All right. Let's talk about some other sources of income. Unemployment is taxable, and the reason I'm saying this now is because I got people coming to my office with $25,000 in unemployment benefits. and they take out 0 in taxes. So at the end of the year, they've got to pay $4,000 on that unemployment. So if you know anybody who's applying for unemployment, tell them to ask them to withhold, because if not, you're screwed. Gambling income. We all play the lotto. Okay, everybody was standing in line this morning at Publix when I went to get milk because it's 100 million tonight. I don't know which one, but one of them is 100 million. 400.
400 million?
Okay. All right, 400 million. I have no luck whatsoever, so I never play the lottery. But if you gamble, if you go out to the Miccosukis, if you go and play over at the Seminole Indian, keep your receipts of all your losses. Because the day you win, the IRS sits at every single casino in the United States. When you go to get your winnings, they ask you for your ID, your Social Security, and your life history. Okay? The major casinos in Vegas have an IRS agent stationed there every day, just to make sure they pick up all the gambling winnings. So, you're going to have to put your gambling income up there, but you can deduct the gambling losses, not dollar for dollar, but you can deduct them. So you can net out a large portion of your winnings by your losses if you keep track of your losses. And the reason I tell this is that more and more people are going out there and playing at the Seminole or Miccosukee or the Lotto. The Lotto is gambling. Okay? I mean, I was watching these people in line today. People that I know don't have money betting $100, $200 in lotto tickets. That's a lot of money.
If they have saved it, that's probably
I'm saying, yeah, they get to the 100 million. My nephew buys them every once in a while. He doesn't buy them very often because we're not basically a gambling group. But I have clients who are like hardcore gamblers that will go to Las Vegas and spend $30,000 at the tables. I have my stepbrother who I still don't know how the hell he does it. He goes to Morocco for the Baccarat tournament every year. Cost just to sit at the table is $250,000. Yeah, he's a lobbyist. He's got money. All right, and his wife is a really good attorney. We call the industrial bitch from hell. Because she's a really good attorney. She doesn't lose cases. The case she takes, she doesn't lose. But he spends $250,000 just to walk in the door. So he may lose $500,000. So when he sends me his tax return, I tell him, give me every receipt of the year. Because if you won at Baccarat in Vegas, or you won at Baccarat in Monaco, or you won at Baccarat in the Bahamas, I can offset some of this with what you've done. But if you don't tell me, I can't help you. And it still requires me calling his wife and telling her he's costing you this much in taxes for her to get after him for the losses. And the losses are on his credit card because he puts it all on his credit card. All he can do is send me the statements. And let me tell you, I have a brother and 2 stepbrothers. They always file their returns October 15th, which is the last date to file, and they always send their information to me somewhere about 7 o'clock that night. And I have till midnight when the IRS closes. Yeah, that's what they say. My return is easy. None of your returns are easy. None of the 3 of you have ever had an easy return. And of course they pay so well for my work. Yeah, I'm going to start billing them and tell them I'm not filing till they pay. Stock transactions. The IRS is now getting really nitpicky about stocks. Because what they did before is the bank would tell you how much you sold it for, but they never told you what it cost you. So you would fake capital losses. And IRS found out. So now the bank is giving you how much you bought it for and how much you sold it. And the net, so that already the bank knows what the IRS knows what your capital gain or capital loss will be, just getting the paperwork from the bank. But here's the important thing. When you have stock transactions, be very careful how you play with them. You can deduct your losses up to $3,000 a year. The rest carries over. So you have a stock that has a big loss. You may not really want to dump it unless you have a big gain to play against it. A lot of people, though, the stock is losing money, I'm going to dump it right now. you might as well hold it because maybe your Apple stock doubles in value and you want to sell your Apple stock and then you net the two and you pay a lot less. You have to be very careful about that. Because I see people come in and then they have these huge losses or these huge gains in separate years. My day traders are very good at this. They manage this on an Excel sheet day to day. They know what their net loss or net gain for the year is. And they manage their transactions that way. But those of us that fiddle on Ameritrade or E-Trade don't understand that we may be fiddling wrong when it comes to tax law. And that stock that lost money, if it lost big, it ain't losing anymore. Okay? It's probably down in the dumps. You could hold it a year, sell it January 1st of the next year because you're making a profit on another one, and save yourself some taxes. Stock transactions, capital gains are running 12 to 15% the taxes based on the type of stock. But that's for stocks and bonds. All right? If you own stock in your own company and you sell your company, it doesn't fall into this. Okay? So let's say that Floyd opens up Pittman Technologies. And it's a one-man operation. He owns 100% of the shares of stock. He put in $5,000 for those 100 shares when he started the business. And he invented something. I had three kids whose parents are my clients who started Alienware. That'll give you an example. Okay? And the parents made a lot of money because they were the ones who put in the money. After I told them not to put in the money anyway. Anyway, so he invents some chip or something. And now Dell wants to buy the company. And he sells it to Dell. And he sells it to Dell for $15 million. Okay? That's an ordinary gain, even though it's a sale of stock. Because he is the creator and the company. Okay? Now, if he was smart, he wouldn't sell the stock, he would sell the use of the patent, but that's a whole other course.
So you get ongoing income.
That's,
See, yeah.
I've worked some of these deals out. So be careful about that. Rental income. A lot of you had a condo and you kept it when you bought your home, and so you're renting it out. And that's a good idea, because rental income creates paper losses. You depreciate the condo, and that is money that you don't pay out, but it causes a loss on your income, on your tax return. There are a lot of expenses in relation to rental income that people may forget. Travel to and from that condo to check on it. That mileage is deductible. Car and truck expense. Telephone calls. So a percentage of your cell phone bill, because you're talking to the tenant and you're talking to the repairman that you have to send out. What? What?
You're kidding.
I'm not kidding. My mother had, I called her, what do they call it? A slum landlord. She has a 40-unit building in Little Havana before she died. And I call that a slum landlord. And I used to get the calls because my mother didn't want to deal with the tenants. And I have to get the calls. And you know how much time, how many calls on my cell phone came from there?
So you're writing off as a business expense.
It's a rental income expense, because to generate the income, you have to deal with the tenants. Okay? So that is part of your cost. So I would actually look at how many minutes on my cell phone and run it through and tell my mother, well, this many minutes, is this so much money? We'll put that on your return. You know, this is a mess. But that's very important. My nieces inherited the property, and they have the four of them, but my nephew runs it. And I told the girls, I said, no, we're going to set it up so he gets the expense, because he's the one doing the driving. He's the one doing the this. He's the one doing the that. So now the company what I've done now is the building pays my nephew property management fees, and then he deducts his expenses against that. And then the rest is divided among the four of them because the three girls are out of town. But rental income, repairs, licenses if the county wants a license. If you have to pay for a parking space at the condo, that's an expense. The SOA, the homeowner's fees is an expense. If you pay the utilities, that's an expense. Your insurance on the property is an expense. Here's another thing. If you need money, don't remortgage your house. remortgage the rental property. Because on the rental property, you get a dollar for dollar deduction on your mortgage interest. If you open up a credit line, connect it to the rental property, dollar for dollar interest. Okay, you go and use your home. You don't want to leverage your house. I have rental properties, my own. And if I want to buy something else, I leverage them for the new property. But I leave my house alone. Because if everything collapses, I got my house. And anyway, medical. The mileage you forget to and from the doctors. Okay, what?
You're going to jail.
I don't go to jail. It's in the law. It's in the law.
From the doctor, right?
What?
To and from the doctor?
To and from the doctor. And actually on my tax program, it brings it up as a question. How many miles did the client spend on doctor's visits?
Wow. Okay.
Go look at your Schedule A. God. Where do you do your taxes? Floyd Pittman et al.?
Wow.
You
Didn't know
didn't-
that. Didn't know that.
Okay. Mileage to and from. You got to go to Sylvester. You got to go here. And you test anything that's not covered by your insurance plan. Anything. Keep track. Guys, you don't know how much. When you Mickey Mouse all those little bits, what it comes out to be if there's something wrong with you. I mean, it's incredible. A little bit here and a little bit there and a little bit that. If you're taking medications regularly, the expenses are incredible. When you look at the, I have clients, I send them, I go, you buy all your medicines at Walgreens, right? Go to Walgreens and get a printout. They get a printout and they're like, oh my God. With the 5 and the 10 and the 2 and the 20 and the $30 copays that goes through the year. The same thing with the doctors. Every time you go to the visit, you gotta. If there's somebody in your house who's a hypochondriac, I promise you, you're gonna make money. And I live with one, so I understand. So you have to watch this. Your eyeglasses, your dental appointments. People forget eyeglasses and contact lenses. We forget those all the time. But they're deductible. And you have to remember that. Any type of medical treatments that you do, any physical therapy, things like that. And then there's the extreme things for specific illnesses that you have. And there's whole court cases out there. There's whole rulings out there. So a lot of times when somebody comes in and they have a special condition, I'll go into the IRS thing and I'll Google it to the cases. And it'll come up, things that they can deduct I never even thought about. But it goes with the illness or whatever is wrong with them. My friend of mine, her husband, he got injured in 9/11 and he has spinal damage. And so he has to have a special back brace that he has to wear a certain number of hours of a day. Well, that back brace, he has to replace it every once in a while because it's like fiberglass made. It's really interesting. It's like $6,000 every time he has to replace it. Well, the insurance doesn't cover it because if he does it, he has to do it through the VA, and it may take 2 years to get the back brace because you know the VA is backlogged. So he goes and he buys it himself. That's deductible. I had to look it up because I always going, well, is it not, is it that? It is. Okay? Part of the reason he has to replace it is he's not supposed to jump, and he goes jumping with his son, and he wears his back brace, and then it cracks on the jump, but we won't get into that whole issue. Taxes. Your sales tax. How many of you deduct the sales tax maximum? How about on your car? Did you deduct the sales tax when you bought a new car? And your boat? There's not a lot of Cuban men here, but Cuban men buy boats. And, you know. Yeah, they do. And off-road vehicles and things like that. All that is deductible. Taxes on a piece of land your mom left you. Or a second, or on a vacation home. All right? Things like that. Yeah! You went, wait a minute, I got a vacation home.
Taxes on the home your mom left, right?
Yeah. Because, let me tell you, I pay taxes on my uncle's house because he doesn't have money to pay the taxes on his townhouse. He has it rented out, but the rental income somehow gets in his pocket and never shows up. And every year he comes to me with the tax bill. He says, I'm going to lose the house. So what do? I pay the tax bill. I deduct it. He's my, that's it. I deduct it. I paid it. I have the checks. you know? And I finally just put a lien against the property for the money he owes me, because I'm waiting for that woman who's 26 and she's gonna marry this 80-year-old man who has Alzheimer's to get the property. Don't laugh. It happens at nursing homes all the time. And so that's why my uncle lives with me and not at a nursing home, because it happens. But remember things like that. Y'all forgetting this. Interest on your mortgage, on your equity line, on the vacation home, on the house your mama left you. You know, you forget these things, but they're out there, okay? Interest is basically on homes right now that you're allowed. The premium insurance, the points when you refi. Beware. Bank of America is doing something very interesting. It allows you to refinance at a lower interest rate. Then they give you a reduction of $1,000 to $2,000 on your mortgage. Okay? That money becomes taxable income to you. And they send you a 1099. I've seen 6 of them already this tax season. Okay? All the banks that are doing refis are coming back in and hitting you with income so they can take it as a deduction. So beware when you do a refi, ask questions. What is taxable that you're doing for me? Which of these things are going to be taxable? When you refi, look at the H1. There are fees there that are deductible. Okay, the HUD-1, the form that you sign when you do a refi. And a lot of people are going through refi by now, or when you buy a home. Look at those. It's amazing what you miss. Charity. United Way is one, but your church, how many times you put money in the thing in the church? What?
$200 for church.
Well, you put 200?
And I'm cheap.
Okay, you don't go to mass every weekend. The average Catholic puts $5 in the bin every Sunday. There's 52 Sundays a year. Do the math. Okay, I assume all my clients are highly religious in whatever religion they're in, because the IRS doesn't require substantiation for the cash in the box, and the average is 5 times 52. Okay? If you're Jewish and you pay for high holidays to be able to sit down, that's deductible. Because on the high holy days, the synagogue sells seats. Yeah, they do. And now you have to stand. I learned this from Barbara Rosenthal. Barbara explained to me why only her husband goes and she doesn't go. She doesn't want to pay for a seat.
So is there a flag or an alert on charity now?
Yes, it is. And if it's more, they use the old Puritan rule of a tie. If your charity is more than 10%, they may start asking you why. Okay? Your church should usually give you paperwork if you do it through your church in a format way. But in Catholic churches, unless you have a kid in a Catholic school, you're just dumping cash in a bin. And you hope to God that the bin is being used correctly. Yeah, I don't trust anybody. But cash, United Way, the firefighters, the Humane Society, okay? PBL comedy show tickets. All right, that's a donation because that money went to the American Cancer Society. All right, things like that. How many times are you giving money to student organizations that are doing community service? PTK. All right, all these, they come around, they go to your office and they go like this, and you give them money. You know, the softest hit we ever had was Armando Ferrer. You can get $20 off of him in a heartbeat, any student, for a community service project. And Floyd's laughing because he knows it's true. Okay? He does. So anything like that, remember those. Keep track of them. Write them down somewhere. Because you give a lot of cash that you forget. Write it down. Write it down and write it down. And you'll see how the numbers add up. Anybody has a kid in Catholic school? Well, you're required to pay a donation to the Institutional Advancement Fund. It's called a donation, but if you don't pay the donation, you can't go to school. Well, that donation is deductible. The tuition is not, but the donation is. Okay? Anyway, miscellaneous deductions. How many of you have a safe deposit box? It's deductible. How many of you pay to get your tax return done?
Yeah,
It's deductible. How many of you have somebody managing your investments? Or Ameritrade charges you an investment fee?
yes.
That's deductible. You didn't. Okay. How many of you went to the lawyers and got a will done? Okay. Protection of income. When you get your little will done, is deductible. Legal fees on the divorce ain't deductible.
No.
I know.
That doesn't make any sense.
I know. I never understood that one either. But legal fees, because somebody is suing you based on something you did, whether it's malpractice at work. I recently learned from my stepbrother's wife that you can sue somebody who is your boss individually and not the institution. Never name the institution. So the institution's not involved. Sue them as an individual, and the institution won't pay their legal fees and won't represent them because they don't want to be brought into the lawsuit. And so that person is out money. Well, that person's legal fees are deductible and my legal fees are deductible. Maintenance protection of income. As I said, my stepbrother's wife, Tiffany, is very good at this kind of stuff. Miscellaneous deductions, there's a lot of different things. Casualty losses, your house gets robbed. Not only is it the things they steal that the insurance doesn't cover, but your repairs that the insurance doesn't cover. All right? Casualty also includes if they rob your car and they take out your tablet and your laptop. Or they rob you on a trip. You're on a trip and they steal your jewelry or they steal stuff. Here's a very important one. When you do your W-4, be careful how many exemptions you take. Sometimes you add more so they take out less, but then at the end of the year you end up paying. Sometimes you check that box that says you qualify for the earned income tax credit. That means they take out a lot less from your tax return, and at the end of the year you don't get your full earned income credit. And then you go, what happened? What did the IRS, why? And it's because of what you put on the W-4. So be very careful how you set up your W-4. And if you're single and you're making a lot of money, lower your numbers as much as you can. Because you may have some alternative minimum tax issues, and I'm not going to get into those complications. But that's basically it. I have some flyers. I brought the ones on educators, and I have some for business professionals and for people who have small businesses in case you have a business on the side. Any information you can ask me. I'm always in my office, and I'll answer anything.